The reason why I wanted this call was because I just wanted you to look at another round of 20 trades that I made, and if I made any mistakes or is there anything that I can improve on in
Okay.
terms of entry or making my
Okay.
levels.
So kind of have highlighted in, you see it, I'm actually highlight purple, maybe, or actually maybe an orange color. That's the time frame to trade. So one thing I would note, like if I was looking at this from a, let's say before you made that trade, right? So I go free trade somewhere around here. I mean, I would say we're kind of in this sideways consolidation, right? There's really no up or down. So it's in consolidation. Just know anytime before you get into playing a trade, I want to know kind of what is price wanting to do in a higher time frame. In this case, there's not a bias up or down, right? It's kind of in this parallel bands, right? Kind of like in a consolidation mode. Although
Right.
clearly in the past 24 hours, it's trending down. So your trade definitely aligned with the trend in that sense. It was moving from this high here, right, down to the low when you made your entry. Okay, now I see what you did. Okay, now so it looks like you used, so again, there's different styles. So let me say this first, Brandon. There are 100 ways to trade, right? We have a general system of supply and demand. And so there's a lot of different styles, right? And what it appears to me, what you're using like a lower time frame supply, it seems like, because it looks like you see, I'm gonna draw on your screen. This I'm gonna see if this zone shows up on the 30-minute. I'm gonna also highlight it on my screen because that's what you use basically for your trade, right? To set up the bounce off that zone.
Yes.
And if that's working for you, stick with it, right? I use 30-minute. Of course, I'll use 1 hour as well, but I just go with 30 and go with that. So what I think what makes sense on this is that you saw the reaction. Now, I guess the second question you'd ask yourself is what you consider your breaker structure. I'm assuming you thought like this line right here was your breaker structure.
Yes.
Yep. And so then you wait for your retrace, got a good RR, and hit your profit target. Only critique, if I were to critique it, is you're a little aggressive with your, but sometimes if it's running, you let it run. Ideally, you would have set your profit either right above that low that was set. Since you didn't have anything else down here lower to target. I mean, I know you ended up kind of getting out and down around here. That was the trade right there. That's where you got stopped out. So what I noticed about this is, okay, let me go 30. So let me go 30 minutes. You've already got a tap of the supply, right? So this is your, come on, here's your supply. I got this tap right here, right? It's already been tapped once. It also looks like on this one, you didn't get a clear downside break of structure. Let me go to 5 minutes, see what shows up after that tap. Sorry about that. My dog is Jasmine. See, one of the things I tell you what I do in terms of, because sometimes you don't get a clear, right? You know the classic setup is this, right? All right. If you're playing a short, right, you get this high, a low. It's a 50% retrace, right? I'm sure just based on what you're doing, I'm sure you know this, right? You wait for that, and then that becomes your break of structure point, right? And let's say
Yeah.
if you got this as your tap, you would want to see this low get broken, right? And then get in on the retrace and trade and try to make the trade here, right?
Okay.
As you know, that doesn't always work that way in real life. So there's a couple ways when you don't get this clear low that you can, like in this case, if you look here, you had this rise and a retrace, but you never got a 50%. You can say, well, this is good enough. I'm going to look for this to break, right? Because there's some consolidation. It's kind of like a little shelf. I definitely would not use this one, right? Because this is where it first tapped supply and drop. I would be leaning toward that as my breaker structure, which didn't really happen here. The other thing you can do is I'll use this called support and resistance, but I'll go to a higher time frame, like 15-minute. So what I mean by that is notice here, this is why I love using this 15-minute. Just use the whole base of the candle. See how this support held? You see that?
Yeah, I
Came
see that.
in the midpoint and dropped it. So I would be using that as my marker. Since I don't have an easy low or high to mark, I want to see, and notice you never got a break of that. You see that?
Yeah.
Came in, it held, came in and held again. So your trigger, since I don't have in the lower time frame, right? I don't have, and I'll send you a screenshot of this when we're done. Since I don't have a really clear 50% retrace low, right? I never got something that touched this to trade off of. I'm going to use what's called, what I call a higher time frame support and resistance. So in this case, I wouldn't go any lower than a 5-minute time frame. I like to do 15 is my preferred time frame for this. And so I'll make a note here so you've got it. When you do not have a clear lower time frame, 50% low or high for your BOS signal, right? So in this case, and let's note here, this is a 15-minute support zone. You see how I drew that, right?
Yeah, and I wanted to ask what qualifies that level, that 15-minute support zone as a level of support.
The fact that you see it never broke. Just the general idea is the higher time frame candles, the higher time frame you go, the more likely they tend to hold structure, right? So as I go 1 hour, 4 hour, right? Whereas the lower time frame you go, the more random it tends to be, right? So, and as you can see here, right, and just look at this, you can see the same thing here. Look at this. See that? So I just tapped it and just kept going. So
Yeah.
that is just a confirmation signal when you don't have a clear lower time frame low or high that's you able to see for a demarcation of a break. I use these support zones as a tool, and I found through my back testing it works pretty well. So what would need to happen for you to say I've got a break of structure is, I'll note this here, is you need to see a candle close for the structure. See where I'm going? So if this had closed down inside here, that would give you a sign that at least there's some pretty good evidence that sellers are now in control. Since that never happened, you'd have never gotten in this trade.
Okay. So basically, I'm not looking for the formation towards the downside. I'm looking for the break of structure as it was like, toward the upside. I'm looking for the market going toward my zone to be broken in the
That's
direction
right.
that I want it. Okay.
Again, and think of it as not your plan A, but your plan B, right? Your plan A is what we talked about, right? Plan A is what we've talked classically, right? Which is I want to see at a lower, like what do you use, 2 or what do you typically use in your lower time frame?
A 5 minute.
Okay, so 5 minutes. That's good. I prefer 2s and 5s as well because I find that particularly in like currencies, futures, there's a lot more noise, and so it's harder to read. So on this lower time frame, then you would wanted to see, using this example here, there need to have been a retrace down to here, right? Up into here, a break of that, look for the retrace, and then get in, right?
Yeah.
That's the more classic setup. And you would be looking to get in here, and this would be your short. With that high as your stop, right? And that profit target. So if it was actually the shape up, that would be your trade. But again, notice what you want to do is I wouldn't be targeting here. I'd be targeting our midpoint of that up, because a lot of times price will reverse right before it even taps that demand zone. So that would be your more, but sometimes you don't get that, right? You'll notice sometimes price moves so fast, right, that you don't get a clear low like this to play off of, right?
Right.
And so just know you got that in your toolbox. I'll just go to a higher time frame. I'm gonna go to 15 minutes. So let's say if I get a major move up, I'm gonna use that 15 minute. And if it closes inside that, I'm gonna use that as my breaker structure and then wait for the retrace to go short. But I can tell, buddy, you are very insightful, which is great.
Thank you.
Are you getting, let me ask you this, have you had many trades where you got stopped out, but your thesis was right? It hit your profit target, but you got stopped out before it hit your profit target on the ones that you are losing?
Yeah, I've had a few.
Okay. Sometimes that could be, so another, I'm sure probably Tyler talked to you about this is, because a lot of times a zone will be valid. You just have to wait for the stop hunt of that zone, right, before you trade it. So just kind of keep that in, particularly if it's that first, let's say between 9:30 and 9:45, or maybe between 9:30 and 10. You may want to be more cautious and say, hey, I'm gonna wait for a stop hunt run of this first, and then if it shows that I still got a nice break of structure, I'll trade it. But I'm gonna wait for the stop hunt first. That's another way. And then I know Tyler does that a lot.
My next one is Euro AUD. This was another loss. I think what I was going for is that I had this little spike up here on this green candle, and I assumed that was going to hold, and that was a brick of structure.
That
But
right there.
yeah,
Yeah, that's why. So okay, let me share my screen on this one. So you see my screen?
yes,
There's your trade right there. So if I was going into, so let's say, let's go back to right here. This is what I love using, like, because to start off, let's say you normally trade on 5 minutes, is that right?
Yes.
So you see on 5 minute, right? We would have said, okay, I think the actual using the zone, we go to 30 actually first. That's a decent zone. There's really, again, I would say is a neutral bias. You can see we're kind of in balance, right? There's not really a trend up or down, but the fact that you had a pretty good pop and it broke structure up here, means that's a pretty good zone to trade, right? So you got all those factors lining up for you. On the way down, we just don't have a strong high to break, right? So let's say if we use, like, even starting from this candle here, even this candle here, never got, got that boom, 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 right? Or something where you could hopefully do something like that, right? Which
Right.
happens. You get this kind of random movement. So let's look at that support resistance. So let's start off at 15. Let's see if we can get a story that we can trade off of. Now, see how now all that goes pretty deep. See how this is tested and hold. So what I would be doing here, I'd be drawing this resistance zone. And what I do is I color them orange to kind of differentiate between supply and demand. You notice I use kind of like a monochromatic scale for my price. So I can kind of do it with my mock-ups, annotations, and color, not be too busy. But you can see that held. So that's a key. I want to see, there's the break I'd want to see there, and see this one here. That's another one I'd want to see break. So I've got, at a minimum, I want to see this one, possibly this one as well. So let's say those are the breaks we want to see. So now that I've got this mapped, I'd be going back to my 5 minute, and I'd be looking for something to close up into that. Okay, I got my close there. That's not bad. So you could have said, okay, that was my trigger. And of course, wait for a retrace, right, to get in. Let's just see how this plays out. Okay, so that would be one. See if you get a retrace. Okay, you got to retrace. Let's say if that was the one you relied upon. I think what you said, it didn't work out, right?
Yeah,
So I
exactly.
would, again, be conservative with my price target there. Let's see what happens if ever even got up to that next one. Keep it 5 minutes. Well, you can see, boom, it just reversed. Let's see if this was a stop hunt situation. So this could be a stop. Let's see what time of day are we at. We're at 8:45. So that's one tell right there. You're getting closer to the market ops open, which means you're more likely to get a stop hunt. So we got a stop hunt there. I call it liquidity sweep. Now, sometimes it just doesn't work out, and it is what it is. But you still see the way I consider it a win is, okay, I think you trade off a decent zone, right? That was a zone that broke structure as far as using that demand. I would say the only thing maybe that would have done differently is, should I insisted on a better break of structure for my entry, right? But the fact that you had a low risk, you had a stop, that means if I'm wrong, I'm only losing a small amount, because that's what really counts over the long haul, is that when I do lose, I lose small. When I win big, right? That's that net P&L impact over time.
Yeah.
But what I'm, Brandon, my take, man, the only thing that I see that you might want to work on is more clearly documenting that break of structure, because it looks like the trend, you're defining your zones, you're using good RR entry, so you're not overextending yourself. The only thing that I would say that, as far as for your development as a trader, is how do I read that break of structure, and am I reading it consistently? So we've kind of gone over like two different methods, right? One would be the classic lower time frame. I got the 50% retrace high or low, whatever I'm trying to break, and I've documented that break. Just know you get that other tool you can use, is like that 15-minute support resistance as another indicator, as a break of structure for trading.
Okay.
What do you think? What do you think?
I think that what you've said so far is pretty good. I think I agree with you in the idea that I need to work on my identification of structure more. I could really see that with a few of my trades, but I think overall I'm doing all right. I know for the most part what I'm doing.
I mean, I just put it this way again. I don't want, but and I've seen a lot of students. You got the fundamentals, man. And I can see you're asking the right questions. I think it's for you. It's just taking that to that next level of. I would definitely make a point of, however you, again, everybody has a different method they use, but definitely capture the things that work best for you. Capture the things that you know are tripping you up, and just make sure you've got that as a visual reference to go back to when you do your reflection. That's the other thing I would say that served me well as a trader, is being consistent in my process. And for phases to the process of being a trader. One, which again, and you're doing this 90%, pre-market planning, right? You got to have a plan before the day starts. And that's mapping out your zones before the market opens. So you know kind of what plays you want to focus on, right? What's the trend? Align, trade the zones with the trend. So if price is trending down, I'm playing supply. If price is trending up, I'm playing demand. Clearly, if it's horizontal, which based on what you showed me, there's a couple examples of that. I'm going to be neutral, right? I'm going to play either one based on a clean breaker structure. So anyway, there's pre-market planning. Second phase is what I call observation. And that's when you are sitting, you're watching price, right? That's when you're kind of noting that high that needs to break, right? I see the bounce, I got a reaction. That is all observation. Third phase is what I call trade execution. And that's when you've mapped out your trade, you've taken your trade, and you got a good stop, right, and a good profit, right, and you're managing that trade. Fourth, which is often overlooked, which I can tell you do not overlook this, is reflection, right? That's the journaling, back testing, because that's where you record those lessons. That's getting your rational mind equipped to trade each day. Because as you know, trading can be very emotional, right? I mean, you're in that trade, you're hoping you're going to win. A lot of emotions come in. But when you have that good anchor of reflecting and knowing what works and sticking to it, that's going to keep you out of a lot of bad trades.